Oil prices have plunged since last summer, and that is having a huge impact on the energy industry. One of the most far-reaching consequences is that oil companies have cancelled or deferred projects worth billions of dollars in high-cost areas like the Canadian oil sands and the Arctic. Well, joining me to discuss this is Chris Adams, the FT's energy editor. So what kind of estimates do you have, Chris, for the kind of projects that have been cancelled? What does it all add up to?
Well, it adds up to a pretty big number. And let's be clear about this. Nobody has really yet put a number on the total projects that have been axed, slowed, canned, delayed, whatever you want to call it. But we've been speaking to Rystad Energy, who are a Norwegian consultancy. They keep track of all these projects, what's been happening to them, and they've come up with a figure a little north of $100 billion. Now, we haven't gone with that number alone. We've spoken to other sources, Morgan Stanley, an investment bank, has been keeping track of projects, and it estimates that about $129 billion worth of projects in a similar category. And that's about a 20% fall in projected sort of capital spending over the next year or two.
20% is a massive number for such a huge industry, and obviously the numbers are sort of eye-wateringly large. But what are the most sensitive areas? Where are the areas that are worst affected by this slowdown?
Well, what's interesting is quite how much Canada is a part of this picture. The areas that have been worst affected include the very expensive oil sands projects in Canada. There's been projects put on hold in the Arctic, notably Statoil's Johan Castberg field. And we've also seen a number of liquefied natural gas projects, which are sort of under review, if you like, and one of which, the Shell LNG Arrow plant in Australia, has actually been axed.
And it's all to do with the break-even, presumably, isn't it? It's the kind of level of the oil price that they need for the project to be economic. Now, with oil around sort of in the 60s, that's just no good anymore.
Yeah, you know, a few months ago they were looking at forward prices of $90, $100 plus even. We're no longer in that world. And this is precisely what they've been doing. They've been looking at forward prices of $70 to $80 a barrel. So if you've got a price at $60 now, you're looking 3 to 5 years down the line at maybe getting $70 to $80 for your oil. These projects are not economic at those levels, and they're going to try to make them economic. And the way they do it is partly putting them on hold. So they hope to take advantage of cost cutting by suppliers, which makes it, when they come to look at the project next, it'll be cheaper for them to do it. Some may go ahead, some may still not go ahead, but there will be consequences.
If we assume that these projects are not only being delayed but are actually being cancelled for the sake of argument, what kind of impact is that going to have on future production, do you think?
Well, whether they're axed or delayed, it does have an impact. Merely by delaying it, you actually push out probable peak production from those fields by another couple of years, which, if you're in the market and looking at the prospects for supply and demand, say over the next 3 to 5 years, you're going to be seeing less oil come to market. Now, if you axe it completely, you completely take that oil out of the market. So what we could see, and people are estimating this, and Rystad Energy has done as well, is some 500,000 barrels a day deferred in terms of anticipated production coming onto the market by 2020, rising to a possible peak deferral, if you like, of 1.5 million barrels a day. Now, that's enough to start tipping the market on its own. It's also enough possibly to give Saudi Arabia that bigger market share which they've been looking for.
And presumably that's also going to have an impact on prices, isn't it? I mean, they're low at the moment, but you know, if future supply is going to be crimped in any way, that could, you know, force prices up.
Yeah, I mean, this is a bit like sticking your finger in the air there and seeing which way the wind blows. People have looked at the prices. Morgan Stanley is one of the investment banks that has come out in the last few days with a report on this. And it estimates that we could see a rebound from current levels of, what is it, $65, $66 a barrel, back up to $85 a barrel by 2017 as a result. But that is looking quite some way ahead.
Chris, thanks very much indeed.
No worries.